Welcome to Taiwan Talks, covering the latest global news from a Taiwan perspective. I'm Betty Chen. Global inflation remains high, but the latest International Monetary Fund World Economic Outlook report projected a decline in the inflation rate over the next few years. According to the report, global inflation is anticipated to decrease from 8.8% in 2022 to 6.6% in 2023 and further to 4.3% in 2024. What do these numbers mean for the global venture capital landscape? Joining us today are Peter Kurz, Quantum International Corporation Chief Strategy Officer, and also we have Victoria Slivkoff, Executive Managing Director of Extreme Tech Challenge and Head of Ecosystem at Walden Catalyst Venture. A very warm welcome to both of you on the show. So let's start with today's conversation. Victoria, what is your take on the present venture capital landscape, and what industry do you consider most appropriate for risk mitigation from now until 2024?
Thank you for having me. It's a pleasure to be here. What we're seeing are the economic uncertainty, the liquidity crunch, as well as a pullback of non-traditional investors have really put a downward pressure on VC investments, as we've seen in 2023, continue to trend in Q2. And this is particularly felt in the mega rounds as the IPO path has closed, so that you're seeing a lot of that impact being in the growth stages. And as we're looking at VC investments in the U.S. accounts for a majority of activities on the global aspect. If we look at Q2 numbers for the U.S., you'll see that deal counts have leveled off, but the deal volume have decreased. And what that means is, as I mentioned, the lack of larger deals being done. And also here's some data being rolled up in a yearly view, which you'll see a very sharp comparison from the height of the activities in 2020 and 2021. And particularly two stages that you're still seeing some activities. Early stage investors are still active, but also growth stage activities have persisted. But that, I believe, is mainly due to VCs protecting their existing portfolio companies as that path to IPO have decreased. So there's a sharper look at that rolled into to the annual view as well. But I think that the messaging here is that investors are taking more of a conservative view. We're being more selective in how we make new as well as follow-on investments, focusing on companies that have real business models with real go-to-market strategies, fine-tuned value propositions, so that there is a path forward. And what you're seeing on the startup side is that they are letting go of non-core activities and expenses to create that cash runway, so that no one needs to go out and raise in this current environment with a potential down round risk.
So Victoria, you talk about the uncertainty and also people are getting more conservative. Peter, I understand that you just came back from a trip from Israel. So could you please tell us a bit more about the VC environment in Israel and how does that compare to the situation in Taiwan?
Well, there have been many comparisons between the two countries made in the past, Startup Nation, Startup Island, and certainly they do have many commonalities, in particular their innovation, particularly in the technology sector. Obviously, Taiwan being more hardware-oriented, the Israeli companies more focusing on software, services, and so forth. I would say, too, that the Israeli companies have been able to get their businesses commercialized maybe faster or certainly extended into the U.S. market more directly. But in Taiwan, we're also seeing obviously a new wave of business. Both markets, too, I think benefit from what we call a cluster effect. Actually, the fact that they are small countries is to some extent work to their favor in that you get a lot more interaction among entrepreneurs or support services that could help boost their operations more quickly, and also they themselves can create a little more cooperation among themselves.
So Victoria, you've been working in Silicon Valley for a long time. So how do you see the venture capital market in Taiwan?
Well, I think it's actually quite lively. I love the entrepreneurial spirit of Taiwan. I believe Taiwan's strategic positioning as a semiconductor leader has spawned so many innovations around the affiliate space, particularly around AI, IoT, data analytics, cybersecurity, robotics, and automation as well. I think there's a tremendous amount of energy, and I also have noticed that there are policies and support systems from both the government as well as private sectors that have been creating this ecosystem and enriching that ecosystem for startups to have access to funding, mentorship, and opportunities to connect with the international market in order to take their innovation forward. I also think that Taiwan, its geographic positioning, serves as a really terrific launch pad to markets in neighboring countries.
So you talk about the policy support system, and also Taiwan possesses a very important geographic position. And going back to the previous point that you mentioned, AI or AIoT, these important industries. Peter, we know that worldwide, the AI sector presents a significant investment opportunity, but previously you said that you're a bit concerned about the potential AI stock bubble. Could you please elaborate more on what do you mean by that?
Sure. Let me first of all emphasize that I mean in no sense that AI is not a real powerful new driver to growth for the economy and for creating tremendous acceleration of the power of computing systems. That said, every new technology, whether you start with containerization back in the early 1980s, which revolutionized world trade, or obviously the internet outlay in the early 2000s, what we see is that it's very easy to increase supply. It's very easy to increase capacity. It's very difficult to control the growth of demand. And in fact, it's very difficult to increase supply incrementally. If you're going to build a factory, if you're going to build a new system, or design a new chip, you have to go all out for it. And yet it may be, months, years before the demand comes up to fill that capacity. So this is necessarily what's going to have to happen in this process. I also remember how a lot of companies feel a lot of pressure to adopt new technologies early on in all of these cycles here, and then find out that they don't have the ability to absorb it as well. So a lot of money is wasted on these new technologies too. Eventually, and it may only be 2 or 3 years from now, again, the power of this new technology will be expressed everywhere in the economy, but there will probably be some volatility in the interim.
Mm-hmm. Victoria, what's your thought?
Well, I mean, despite the decrease that we've seen in venture investment activities, I think the bright spot here is the explosion of venture investment in generative AI, because this really represents a step change in the evolution of artificial intelligence. So there's been a lot of activities despite soaring valuations, and really taking lessons from previous shifts in technology development and platform shifts, for instance, in mobile, cloud, and internet. This generative AI wave has the potential to transform every existing businesses that we have today, in addition to creating new ones. The power of the underlying technology with deep learning algorithms, as well as easy user interfaces, have really driven the adoption of such technologies. And according to McKinsey, trillions of dollars of opportunity and economic benefit that's going to be created in the upcoming years in generative AI. So personally, I'm super, super excited about this space. And if you look at one of the charts I provided, VCs already pour over $14 billion in generative AI investments as the first half of 2023, with a number of large deals. And this is the first time we've seen incumbent tech companies really rush into this space and making big bets. Examples: Microsoft's $10 billion investment in OpenAI, Google's $300 million investment in Anthropic, who's building Gen AI systems and language models. And here's an interesting company called Mistral AI. It is a company based in France, founded by the founders came from Google DeepMind as well as Meta. And they are building the European version of OpenAI. So After starting, then a 4-week-old startup, they raised a whopping $113 million in seed funding with no product and very little team, but that just tells you the ambition of going out there and also the capital intensiveness of this industry to build here. So, super excited, and I think one of the key pain points going forward for the next several years is going to be around data movement. So the concept about interconnect. So I'd be really interested and really excited to look for companies that are building in this space.
So definitely, Victoria, you've talked about the exciting opportunities about AI, and also there are some concerns for sure. We will talk more about that. Based on CB Insights data, global venture capital investment fell to $60.5 billion in Q2 2023, a 13% quarterly decrease, reaching the lowest level since 2020. So how do you assess the current global startup ecosystem? Is it in a bear market, Victoria?
Well, I think even though that we've seen a decrease in venture activities right now, we are settling into a new norm coming down from 2020-21. And as you've seen, unicorn creations have steeply declined since that time. But there's still a significant amount of dry powder sitting on the sidelines and looking to invest in the next platform shift. For instance, AI could be one of the investment theses. And looking at new VC funds raising capital, the activities have definitely slowed, but of the funds that are raised, the majority of that have gone to VC funds with AUMs greater than 500 million. So there's still activities out there and companies will be making big bets. I really believe in fundamental shifts, and capturing that wave of tech innovations will create the next wave of opportunities. But also on the policy side, implementation of bills like the CHIPS Act is really accelerating investment in key strategic areas and creating tremendous opportunities for investors globally. And looking at previous cycles, the economy typically runs in about a 10-year cycle. And historically, we've seen large businesses being built and coming out, emerging in the recoveries. And I believe we will see that in this case as well. So, always an optimist and looking forward.
So in addition to the capital venture market, Peter, what is your projection for the economy going forward?
The economy has been a very tough call. We joke that the recession that's everyone expecting is the most widely expected recession in history, and yet it hasn't come. The likelihood is that it's come in different locations and different pockets, and therefore offset by pockets of strength elsewhere. So we saw weakness in the goods market during COVID, but services were crushed. Now the opposite is taking place. And so we may not ever have a globally synchronized recession to deal with. That said, we are dealing with a headwind in the rising interest rates. And so the fact that the outlook for inflation seems to be declining, it hasn't been reflected in longer-term yields, and that has created a headwind for the venture capital segment, because of course any venture capital investment is going to be a very long-dated investment. Even after the company is commercialized, it may still be many years before they're profitable. And so venture capital is going to be particularly sensitive. So the chart we saw with the fall in venture capital investment is probably the inverse of the interest rate chart as well. The fact is that in part because of the change in policy by the Bank of Japan, which has been trying to now move away from yield curve control and allowing their interest rates to rise. And Japan has been a major source of funding for global capital markets. And then more recently, the Fitch downgrade of U.S. securities, Treasury securities, which is not significant in and of itself, but it does point to their concern that U.S. and in fact every major country's public debt levels are getting to a point where rising interest rates are going to mean a very large increase in debt service payments as well. And this is going to also crimp capital available for capital markets. So while the economic outlook doesn't look as bad as it had maybe at the end of last year, the overall financial environment still is challenging.
Indeed, it's still very challenging. So now, let's take a review of the 2023 Global Startup Ranking. At the forefront are Silicon Valley, New York, and London, and simultaneously Beijing, Singapore, and Shanghai have secured positions within the top 10. And this underscores the influence of the US and Asia in molding trends within the global venture capital sphere. So what distinguishes these Asian markets, Victoria?
I think it's been really encouraging to see innovation hubs outside of Silicon Valley, which has traditionally been the center of gravity, spawning across the world, as you mentioned, from Asia to Europe to Israel, Africa, Latin America as well. So I don't think I can make a blanket statement about Asian ecosystems in general, as they're all shaped by factors such as access to capital, regulatory environment, culture, and so forth. But I will say the following about Taiwan, though, because we're here and there's been tremendous amount of energy I'm seeing here, is that Taiwan still has such a dominant advantage in the semiconductor field. So I think there's tremendous opportunities of startups leveraging that ecosystem and build innovations in related areas. Taiwan also has a very strong manufacturing base and expertise. So if you're looking at investment themes like Industry 4.0, which ties to AI, data, robotics, automation, I certainly see great companies being built here. And what we're thinking about soft skills, Taiwan has a tremendous skilled workforce with great work ethics and strong technological foundations coming from the genesis of the Hsinchu Technology Park, and really cultivating that across the island as well. So very, very bullish about Taiwan. I also think that Taiwan has implemented a number of great policies to make sure that it is easy for foreigners to do business here. The Golden Visa program has made it easy for international talent to come and bring their expertise to Taiwan and grow the economy locally. And the number of incubators, accelerators, whether they're government sponsor or they're part of the international program, have really provided the platform for Taiwanese companies to start here, but with an eye into conquering regional and global markets. I do love to see two things, if I may suggest, in the Taiwan ecosystem, one of which is leveraging more efforts in leveraging Taiwan's semiconductor prominence to develop innovations in areas of AI and IoT, data analytics, robotics, automations, and so forth, cybersecurity, edge computing, and also seeing more luminary Taiwanese Americans like Steve Chen, the co-founder of YouTube, coming back to Taiwan to build, to invest in this ecosystem, and more importantly, serving as role models for the next generations of Taiwanese entrepreneurs.
So I fully agree with what you said, and also Taiwan is very strong in the semiconductor industry, and it's really good to see those outstanding figures coming back to Taiwan to help us develop the environment. So Peter, now we know that TSMC is going to set up their facilities not only in the US, but also they just announced that they're going to increase their facility in Germany. What's your take on that? How will that affect the overall semiconductor industry in Taiwan?
Well, I don't see it as a challenge. I see it, in fact, as strengthening TSMC's global leadership. But it will probably lead to lesser employment growth for a lot of young people trying to get into the industry, which I look at as another positive, because to some extent Taiwan's had a bit of a Dutch disease. We've been so strong in semiconductors that it's crowded out the development of other industries that use much the same talents. These other industries now have some room to grow, and we've seen it happen already. A number of new startups in the software sector, in data-related applications, but also in new energy, renewable energy, in EV applications. And of course in biotech as well, which is another area which has seen a lot of growth, obviously not related to semiconductors. Now that said, I think too, as Victoria mentioned, there will be opportunities in semiconductors themselves. We are obviously reaching the limits of shrinkage at the lithography technology, and so there will be a new sort of incremental technologies that will help push that node migration incrementally further. But again, I think also ultimately the way to really increase the efficacy of semiconductor transistors is going to be through the application of these new software technologies, AI obviously in particular.
So Victoria also talked about the important policy support from the government, which plays a very important part in developing the industries. Now we know that Taiwan and the U.S. just signed a deal on the Initiative for 21st Trade Initiative. So how will that impact the overall landscape for promoting trade between the U.S. and Taiwan?
Well, I think that agreement is a starting point, and it's a very important platform from which I think more substantive agreements will derive, although it in and of itself doesn't have as much substance to it. But it, more importantly, I think allows foreign investors and foreign corporations to feel more comfortable dealing with Taiwan, that there is a backstop there and there is opportunity for Taiwan to become a more integrated member of the world economy. Obviously, more recently, there's been some geopolitical tensions in the region, and I think that has gone a long way in overcoming that particular issue.
What areas should we pay closer attention to, and also what industries may be worthy of investment in the future?
Well, you know, we at the QIC have talked about the HEAD strategy, the healthcare, automobile, energy, which is of course renewable energy, automobile, which is mostly EV, and then the data-related sector, which of course covers a wider range of, again, software, telecom, and other such applications. The areas where we see the greatest amount of new funding coming in is in the first and the second, so healthcare and then these new startup data-related businesses. But energy is going to be a very strong growth area, not the kind of hyperscale growth that you see in again, these other two industries. It's more of a cash flow related business, but we'll have considerable government support, particularly in building out the renewable energy sector. And of course, that's going to be critical to the support of these other industries because they're all very much electricity intensive industries. And then EV is going to be, again, more incremental in providing electronic support to companies around the world, and ultimately hopefully we'll be developing some battery technology here as well, which again dovetails nicely with the renewable energy sector as well, which requires a lot of storage.
Definitely, these are the industries that we should pay closer attention to. And Victoria, as we consider the economic forecast for the latter half of the year may be more fragile, any suggestions or any essential factors that the investors should focus on?
Well, I think it's going back to the fundamentals, right? Looking at companies that have real business models with fine-tuned value propositions, and that's addressing a large problem for the customer. So visibility to profitability to revenue generation is really, really important. At the same time, you know, startups should really think about cutting out core costs while not jeopardizing investment into key initiatives, because ultimately you want to build towards that next milestone, which allows you to go and raise at the next round. Hopefully it's an up round. So I think it's really heads down in building and really looking at the fundamentals. And for investors, also going back to looking at unit economics, companies that have solid unit economics, viable business models that have, you know, real trajectory to go forward.
So I just wonder, because a lot of people now they're trying to work on their own startups, and they definitely would like some tips from you. So for anyone joining the business of startup, how can they attract, say, more capital or more support from international investors? Any tips?
I think first of all, build a solution with that's solving a really large problem, and you should be an expertise into that particular area. Ideally, you want someone with technical expertise as well as commercialization experience. I would say also be lean, identify the first use cases that has a large addressable market, so that you're very focused towards user acquisition and revenue generation. So I think those are the key suggestions that I have, and also network.
Network.
I was at CES earlier this year and actually saw there's a Taiwan pavilion. So I know the government is doing quite a bit of work in setting up these international platforms to allow Taiwanese companies to bridge themselves to the larger markets, well, U.S. being the primary one. So it's really encouraging to see that, but I think it's showing up. Mm-hmm. Showing up means that an opportunity might happen. So it's show up, be proactive, refine your pitch. You're always pitching yourself, pitching your company, pitching your ideas. So know how to deliver what you're trying to say very succinctly.
That's really wonderful tips. What about Peter? Any suggestions for the rising industries that have great potential and that can help Taiwan increase our competitive edge? Any suggestions?
Well, certainly each industry is going to have different suggestions relevant to them. The sector that I look at more is healthcare, and there's already a lot of momentum coming out of that space. It's been focused primarily in new drug development, and so for that, I think there needs to be a growing sort of ecosystem where the risk of developing new drugs is mitigated by support from, again, AI companies, bioinformatic companies, or what we call CROs. And I think similarly, to the extent that any new company in any of these other segments can find an ecosystem that they can plug into that will help de-risk that whole process of bootstrapping yourself, and also giving you more verification by having that association, will reduce the barrier for outside investors to want to invest.
So definitely cross-industry cooperation, as mentioned by Victoria, networking, be there. You have to be succinct and very clear about your pitch. That's how you can attract more attention and more investment. Right, thank you very much. If you like our show, please search for us on YouTube, give us a thumbs up, and hit subscribe to our channel. Thank you for watching our show today. Stay safe and see you next time.